Hello friends, welcome back to my channel. I am here with a trading strategy based on indicators, and it will have a success rate of 90%. As of now, I have well back tested it on multiple stocks. So let's go ahead with the indicator based strategy. First of all, we go into the browser for tradingview.com. We can select any ticker. For example, for here I have selected QQQ, that's Invesco ETF. Okay, we go into 15 minutes candles, not more not less. Okay, let's not mix up the strategy with reducing or increasing the time frame. Okay, so this is for 15 minutes candles. So we have to add only two indicators because currently only two indicators are allowed free by TradingView. The first one would be VWMA, that is volume based moving average. The second one will be a smooth Heikin Ashi. So here I will use this one, the one with Jack VMK. Okay, that's it. We have applied our indicators. We don't need to do any changes for smooth Heikin Ashi. The VWMA will go there and we'll make the setting to 30, and we'll make the style little bit bolder line so that we can see it properly. You can even make it darker. Okay, so that's it. Our indicators are ready. So to get into a trade, we have to have three conditions. Okay, so for example, let's talk about the long trade, means going into the call side. If you want to buy a call, okay, the first condition is the candle, the 15-minute candle should cross and close above the VWMA 30. So as you can see over here, the one I'm pointing, it has closed above VWMA 30. Second condition is it should cross the smooth Heikin Ashi. The smooth Heikin Ashi, it has crossed that range also. The smooth Heikin Ashi bars, it has crossed and it has closed. Make sure you close the candle. Don't take a trade in a running candle. It will give you false signals. Okay. The next one and the third one, the most important one, is the Heikin Ashi, the smooth Heikin Ashi should have a little bit green body to go on the call side. So for example, here it did close above both the indicators, but the body of the smooth Heikin Ashi is not yet green. The second one is still red. The third one is a red candle over, a small red candle over here, but still the body of a smooth Heikin Ashi, it's zero body. It's neither green nor red. But the next one over here, it has closed a 15-minute candle. It does have a green smooth Heikin Ashi body. It has closed above the, it has crossed and closed above both the indicators. So here, this is our entry, that is 441.47, as we can see on the price chart. What is our stop loss? The stop loss is the candle which crossed the VWMA, means volume weighted moving average. So this candle, so the low of this candle is our stop loss. Okay, so I will just make a, okay, so this is our stop loss. Okay, and let's mark our entry. So this was our entry. Okay, this was our entry. Now we'll go with 1:1 profit target. So how much was this? This is 441.56, and here it was 435. So approximately $6 it has gained. Okay, so from here, if we go with 1:1 profit target, we should be targeting to 447. So if you can see, on the same day, it may not reach the same day. Yeah, it did reach the same day. As you can see, it reached 447. Okay, so you may not wait for the exact target of 447. Even if it is close to it, you still gain that much profit. Okay, and if you are on a call side or on an options, you would have gained really good profit by that time. Okay, so this 447 was our target, and it achieved almost 447 on the same day. Okay, on if you left it go, like for example, here it gave a dip, but it never touched the our stop loss. Okay, it went below our entry. So always I recommend, if you gain like if you have gained, if you are on options, for example call option or put options, and if you have gained 15%, I always recommend all my viewers to keep a stop loss above your entry. So you would have gained around 15% over here itself. If you keep stop loss above entry, you would have got exit by this point. If not, you would have achieved the target of 447. If you didn't take that target on 447, still if you see, the stop loss is not hit. Okay, and the next day it went above 447, it went approximately 449. Okay, so this was one. If you do the same thing on the downside, okay, so same three conditions, it should cross both the indicators. As you can see, it has crossed both the indicators, and Heikin Ashi should be red. So here we can see that this one, this candle over here, it has given a red. So this is my entry. What is my stop loss? The candle which crossed the VWMA. Okay, so this is my stop loss. Okay, this is my stop loss. This is a quite a small range, 445 to 442. That is a $3 range. So if you go downward from 442, your target should be 439. If you see here, 438 was achieved in like 1 hour or so. And if you leave it for more, if you go for the low of the day, the low of the day was below 435. So you got a great range of profit over here. Okay, you could have booked a great range of profit in this direction. Now the next day again, if you see, it crossed over here, but the Heikin Ashi is not green, the Heikin Ashi is green over here. So this is your entry. Okay, and yeah, this is your entry. And as per our explanation, we'll go with the candle which crossed the VWMA. So this is our stop loss. The stop loss is at 440. Our entry was 443.7. So you have an you have a 3.7. So the range is 3.7. If you go 3.7 from 443.7, it would have gone up to 448, approximately 448 it would have gone. And if you see here, 449 was reached, and we are in a live market currently. So if you see here, it has crossed over here, and you would have got your profit at 448 point something. Okay, so that 1:1 target, you have got profit. Okay, now let's talk about a condition which would have not come. So if you see here, it crossed both the indicators, but if you see this, if you just keep your browse your mouse over here, you can see the Heikin Ashi was never green. Okay, it was in a long term red. It was in a long-term downward flow. So even though the bulls were here from 424 to 442, it gave a nice bull run, but still the Heikin Ashi on a 15 minutes was never ever green. So as per this strategy, you would not have entered into a call side, but whereas for the same thing here, you would have entered a put side at 436. Okay, and 441. So you have a $5 range, so you should be closing your trade at around 431. So it didn't come to 431, but again, as I said, if you get 15% profit on your put, you should keep a stop loss above your entry, and either you book your gains at 433 or you would have got stopped out. Okay, so this was a great one. I have also tested it with stocks. If I just change, like for example Microsoft, you see here on the open of the day, you got a great entry over here at 441. Okay, your stop loss would have been at 397, so that is $4, 401, sorry, 401 and 397. So you would be waiting for a target of 405. If you check over here, you have got 405. Okay, now on the downside, this is your first trade over here. Okay, so you would have got an entry at 402. As per the strategy, the stop loss is 405, so you got a $3, means you will be waiting for a target of 399 from 402. If you see here, the target of 398 was achieved. Okay, so in the same way, you can go ahead and do this, try yourself all the back testing. Okay, very simple and very clear. You don't need to put much of brainer. Okay, on a day basis you can just keep a watch. You can set alerts if you have a account, means a pro account with TradingView. You can set alert. For example, I am on a 15 minutes, so I will just keep an alert to cross my VWMA. I can keep alert forever, means okay. Now I just name my alert as MSFT on watch and crossed VWMA 30. Okay, so this is my alert name, that Microsoft has crossed, Microsoft is on watch and it has crossed VWMA 30 on 15-minute chart. I'll just create this. I can create up till say 5th of October. That is the end date for this. The trading view will allow you for 2 months around. Okay, so whenever Microsoft crosses VWMA 30 on a 15-minute chart, I will be alerted, and from there I can keep a watch. Okay, so similarly I can place, if I do have a pro account on TradingView, so I can keep a watch. I can keep similar alerts on all these stocks. Okay, I have around 50 alerts I can keep, so I can keep the same alert on all this. Whenever I get the alert, I will start watching it, and if all three conditions are satisfied, I will go on the long side or put side. For example, if you see here, now we are in a current live market, and I believe Microsoft might go below VWMA. That is, VWMA here is 403.330. If there is a candle close another 50 cents, if a candle closes below that, I'll keep this on watch, and if all three conditions satisfy, I'll go on the put side. And I think 404 is the place where it is above VWMA, so I might wait for a target of around $2. So 401 would be my target for that put. Okay, so this is the way you can go ahead and trade. You can check this strategy on multiple stocks. For example, let's see Tesla. This is the last one I'm going to talk about today. So here you get Tesla today, just now if I had this alert for Tesla, I would have got an alert for Tesla that Tesla has crossed VWM. It closed in a red candle, and it's below that. Both the indicators, my indicators are red. Okay, and 199 would be my stop loss, and I got the entry at 197.74, means around $1.5. Okay, um, yeah, $1.5. So I would wait for a target of 196, and you can see that already it has achieved 196.5. Another 50 cents my target would have achieved for a Tesla put, and I will book my gains. Okay, similarly over here, if you see, it crossed both the indicators, and here yeah, it did fail this time. For example, here it gave you an entry for Tesla call side, but your stop loss would have been at 195.6. You entered at 199.4. Okay, but it came down and it went up high up till 201. Okay, so you didn't get a target, and it hit your stop loss, so that's fine. Taking a stop loss is a good habit. Sometimes it will come. There is no strategy in the world that is fully stop free. Sometimes your stop loss will hit. If you take that stop loss, it's fine. If you trade only Tesla every day, here for example over here, okay, in this case it crossed, and here you would have got an entry at the put side. Okay, so your put side entry is 198.69. Your stop loss is over here, which is 199.72. If you see that, you get a target till here. Okay, so from 197 to 192 you get a $5 target on Tesla. Okay, so similarly you can try this on all the stocks and ETF that you like, that you trade normally, and you can back test this strategy how it suits you. Okay, so let me know, put comments on the channel, and do click subscribe and alert button. And thank you for watching. Wish you a happy trading and a lots of profit for each one of you. Thank you.